Weekend stock market talk for December 4th, 2022. Looking at the S&P 500 index seasonality for December, we normally go into a bullish trend, what we call the Santa Claus rally or the Christmas rally. It normally starts a few days before Christmas and it normally goes off until the end of the year. We could get a slight sell-off right before that rally based on our seasonality. However, we do have some extenuating circumstances in regards to, I think we have CPI data coming out next week. And then we also have another Fed meeting. However, even if those meetings cause some type of sell-off or that information causes a sell-off on the next week of December, we still definitely have enough time to get the rally that normally we look for towards the end of the year that we call the Santa Claus rally that we normally get towards the end of every year, as there's a lot of exuberance and I would call a desire to close the market out on a high note as we get ready to close the year out. Looking at the economic calendar for this upcoming week, I don't see anything that I believe will really move the market from a scheduled standpoint. So we could have some things that come across that aren't necessarily scheduled. We are going to look at U.S. services PMI final on Monday. We are going to look at consumer credit on Wednesday. Definitely we're going to look at jobless claims, continuing jobless claims on Thursday, because that could be setting us up for what we think the Fed's going to talk about next Wednesday, I believe. Then we're going to look at a consumer sentiment index from the University of Michigan on December the 9th on Friday. Also, wholesale inventories getting revised. Looking at the earnings, we're getting ready to close out our earnings season. We don't have as many companies reporting, but we still have a lot of really decent consumers. If you look at, forgot the name of that particular restaurant that reported last week. I'll probably put their graphic up on the screen because I can't recall them right now. Still going to look at consumer discretionary entertainment. AutoZone, definitely going to look at them. Dave & Buster's. Let's see. Don't see anything else on Tuesday that really stands out. Going to look at Wednesday, Academy Sports, GameStop, Campbell's, Ollie's, Sportsman's Warehouse. Thursday, after the close, we're going to look at Costco, going to look at Lululemon. Definitely that's going to be really important to try to figure out where the consumer's at. DocuSign, Chewy, and that's pretty much, Restoration Hardware. I almost forgot about them. Not a really strong earnings, but there is a lot of earnings from the consumer standpoint, consumer discretionary, and give us a better understanding of how the consumer perceives their position in this economy right now, whether or not they're still doing the spending or have they decided to pull some of their spending back in anticipation that things are going to get worse in the future. Now looking at the SPY, there's nothing to me that really jumps out. In my opinion, what we're doing is we're trading in a range. What I don't want to do is make up a narrative to try to just have something to talk about. We've already identified where we think our resistance points are at. We're primarily trading in that particular range. What we're seeing is that when we dip under it, we found a reason to come back into it. So we saw this here. We bought in really strongly here. We topped out again around 410 and saw it right back down. It's very consistent to where we were at here. Even if we move back up, we see the same thing at 420, then we see the same thing at 430. We have multiple resistance points past the 410, and we need to continue to move past all of those, in my opinion, for us to be in a continuous bullish trend. However, we're not in a really bearish trend either, because once we get a little under 400, around 390 to 400, the market finds a way to buy back into it. So therefore, we could just be range bound until the market makes a decision as to where to drive this market on the day-to-day level, right? So we're looking at the yearly day. We can also look at the weekly, and we're seeing something really similar. So weekly, we're moving up, but we haven't gotten past this point here at around 430 on the weekly candle. And we just want to continue to observe that. Every level here on the weekly, we need to close at a subsequent higher level for me to be really convinced that we're bullish in that particular direction. Going to the QQQs, we're seeing the same thing. Very much trading within a range. Our next level of resistance is going to be around 300. We saw that we hit where we were at our resistance level before, and we saw it right back down. Therefore, the market's not really convinced that they want to buy the Qs at a higher price at this current time. So even though we got bought in really heavily here, we didn't see a lot of continuation. A very low volume on the day. So compared to here, 74, we go to 55, then we go to 53. Very tight range, very low volume compared to the day before. What you would want to see in my opinion, if you believe the market was very bullish, is I would want to see a wider price range as we go up and more volume, which means we have more people involved in that market. After we had this really, really high, I'd say really strong bullish day, which was a lot of short covering, we didn't see that get continued with a lot of buyers. And then what do we see the next day? We see us moving, us opening at 288, closing at 292, but also not a really strong move up to the 300s. And like I said before, is that I'm not going to try to create a narrative where there's not one there. We're essentially just inside a range. Go to the weekly, we're seeing the same thing, right? We're just in a range on the weekly candles. We haven't moved up north of 300 really strong. We also have not moved up around the 320s. And so what I would want to see on the Qs, on the weekly candles, is for each weekly candle or a few of the weekly candles in a consecutive weeks to start closing out on higher and higher notes, and we're not seeing that. What we're seeing is that we've now started to trade in a range because the market is trying to figure out what direction to take prices. Doesn't necessarily believe that prices should go down, doesn't necessarily believe that prices should go up. So what we're going to do is just trade in a position within a very tight range until the market has a narrative or has news that makes it start to believe I can either pay more for this particular security, or I need to start selling at a low and low price to get out of this particular market and take my money somewhere else. That's pretty much all I'm looking at in the market. We may close this year out on a bullish note. We may sell off a little bit because of the FOMC. So what I'm going to continue to do is observe. I'm not going to take anything for granted because most of the top people at the funds, to be realistic with you, they're on vacation, right? There are people still working, but they're primarily on vacation. We may get our traditional algo buy-in towards the end of the year because that's pretty much what everybody does historically. But I'm gonna just continue to observe and not try to create a narrative where one doesn't exist just so I can have something to present to people. This could just be we could just be in a wait and see market, right? And so I would want to encourage everybody to just wait and see, figure out what direction we're taking, because most definitely as traders, we need a direction. Or you can try to trade a really, really tight range if you have that skill level, right? Hope you got value from it. David W. Williams, also known as Diamond Dave. I'll talk to you later.